Hello everyone, welcome back to your midweek updates on technical insights. On Wednesday morning, US and China announced that they have agreed to a preliminary plan to ease the trade tensions among both countries, which could revive the flow of sensitive goods among the world's two largest economies. US and China officials in London both said that they agreed on a framework on how to implement the consensus the two sides have reached in the prior rounds of talks in Geneva. And the delegations will now take their proposals back to their respective leaders. Looking at early hours trading, Asian market mostly climbed as they cheered the progress in the trade talks. Shanghai Index is up about 0.5%, with the Hang Seng Index climbing about 1%. Overnight in the US market, the S&P 500 Index rose about 33 points or 0.55%, posting a 3 straight winning session. The broad index now sits just less than 2% off the all-time high that we saw 4 months ago on the 19th of February. The Nasdaq Composite Index also added 123 points or 0.63% to 19,714 points, while the 30 stocks Dow Jones Index climbed 105 points or 0.25% to 42,866 points. Top performer on the US indices include Intel shares, which was up 7.8%, Tesla also rebounded by 5.7%, and Warner Brothers also up by 5%. In the US, investors are now turning their attention to the health of the US economy as we look out for the May CPI numbers reading tonight. Analyst consensus call for a 0.2% month-on-month increase, while the headline inflation numbers is anticipated to have grown 2.5% from 12 months earlier. A hotter than expected CPI report may pull down the markets who are worried about the inflationary pressures caused by the US tariff. But we do not expect the report to cause any significant changes to the US Fed current wait-and-see approach, as the US non-farm payroll data that came out earlier last week came in stronger than expected. Back to Singapore, our STI index started the trading week relatively flat, up 2 points on Monday and down 2.5 points on Tuesday. With Tuesday negative close, STI also ended a 5-day winning streak, down 0.1% on Tuesday to settle at 3,933 points. Our 3 local banks also ended lower on Tuesday, with DBS falling 0.8% or 34 cents to $45.15. OCBC also dropped 0.6% or 10 cents to $16.27, while UOB slipped 0.2% or 7 cents to $35.25. Top gainer on the STI index on Tuesday was UOL, up 1.8% or 11 cents to $6.18. While DFI Group reversed their Monday performance, which was the biggest gainer on Monday, up 5%, to lose most of them on Tuesday, down 1.8% or 5 cents to $2.75. On Wednesday midday trading, the STI pulled back by about 21 points or 0.54% to 3,916 points. Week to date, we are down about 21 points for the week or 0.55%, but year to date, STI is still up by about 3.23%. Locally, our investors are still concerned about the US and China trade talks, as structural issues like the chip controls and national security issues are still unresolved. And the key concern is still the uncertainty of when Trump will resume his aggressive trade tariff as we approach the 9th of July tariff deadline. So for today's technical analysis, let's look at one of the top gainers yesterday, which is UOL. This Wednesday morning, UOL share price fell by 6 cents or 0.97% to $6.12, giving back much of their 1.8% gain that we saw on Tuesday. We noted that for much of 2024 last year, UOL share price was in a long-term downtrend, following a series of lower highs and lower lows. The share price hit a low of $5.07 in late June over here, and had a decent rebound of up 12% to the high of $5.72 on the 20th of September, but was not able to form a higher high above the level of $5.92 that we seen on the 30th of April last year. Price then resumed the downtrends towards the year-to-date low that we see currently at $5.01, and the low in June at $5.07, with this low in January at $5.01, may have formed a double bottom formation, giving strong support for UOL share price. And that resulted in a strong rebound of 18%, where the share price jumped in the February and March period, forming a higher high than the previous high that we see in September at the level of $5.94 on 28th of March. The formation of the higher high in March compared to the September high may suggest that UOL share price have broken out of the long-term downtrend that we see over here, as it also forms a higher low over here on the 9th of April at $5.35. As of midday trading today, UOL share price hit a high of $6.19, suggesting another formation of a higher high formation, indicating that the continuation of the uptrend rebound that we see this year is likely to continue in the mid to long term period. Looking at the indicators, the MACD is still positive, indicating the presence of the uptrend momentum in the mid to long term. The RSI reading, now at 38, comes down from yesterday Tuesday reading of 75 points, which was 5 points above the 70-point overbought mark, suggesting that we may see a short-term pullback. Looking at 4 analysts covering UOL share price, we have 2 strong buy calls, 1 buy calls, and 1 strong sell call. The 12-month average target price among them is now at $7.15, representing a possible 16% upside, with a maximum estimate at $8.40 and a minimum estimate at around $5.50. So for investors looking at UOL, a short-term pullback towards the 20 days moving average or the 50 days moving average, the white and blue line that you see here, now at $5.76 and $5.84 respectively, to further accumulate on UOL shares again towards analyst average target price of $7.15. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.